if you were to do a normal build versus a modular, it's the same pre-approval for the same construction. It's not anything different that we're applying for. The same rates, the same product, the same solution.
Hey guys, today you're listening to Anchor Talks, Ask the Expert podcast series. I'm Lester from Anchor Homes, and today we're joined by Daniel Lagden from Level Up Home Loans. Today we're going to unpack the common misconceptions when financing modular homes and why modular homes aren't that hard to actually finance. But if you're early in the process and you're trying to make sense of the financial side of things, this conversation will save you a lot of time and we'll answer a lot of questions. Welcome, Daniel.
Thanks, Lester. Good to be here, mate. Good to be chatting with you again.
So today we're going to be talking about everything finance and modular homes. Obviously, you're the expert in this. That's why I have you on the series today.
That's it, mate. That's why I'm here. At least that's what you tell me anyway.
Tell us about Level Up Home Loans, Daniel. Specifically what you do for our clients, but also generally what you do there.
Yep, awesome. So Level Up Loan's been established now for quite some time. Specifically, we're helping a lot of clients in the development space, particularly around the modular and prefab, because it's such a great solution to speed up that timeline of building a house. We also work with a lot of investors that are looking to scale and build portfolios, and we're finding more than ever having properties that can increase that cash flow and take the burden of, covering those repayments is something that we see more and more. It's just definitely becoming more desirable. Outside of that, we're always working with first home buyers and people just looking to build a house in general. So that's where we fit in. We come and help you with the finance side, and we kind of wean out some of those questions that people seem to have a misconception that modular is particularly hard, which I'm sure we'll cover today anyway.
Yeah, awesome. So let's hop straight into it then. From your experience, what have been the key challenges in financing modular homes?
The key challenges is just the general information online. If you go online and you research prefab or modular, there's a bit of a consensus out there that it's just very hard to do. And if you go and chat to most lenders, they'll tell you that it can't be done. Now, the reason they're telling you that is it's just not in their banking policy to do so. So there's plenty of banks out there that will actually do it. You just got to find the right one. So that's where talking to a broker is going to be absolutely key and fundamental in the process of trying to build a modular or prefab home. So it's just a bit of a misconception that it's particularly difficult, but there is solutions out there.
Yeah, no, it's good to hear. And I think we were chatting earlier in the day that one of the things that we've found with our clients is that often if they just go to walk into a branch and just speak to like a generic home loan lender, like I'm sure they certainly have their place in society, but something a little bit more specific like modular just has those other little nuances, and that's where we found you very beneficial, is that you actually understand what they are and you'll be able to bring some benefit to our clients. So I guess the other big news that we've been talking about in our industry for some time now is the new CBA modular finance product.
Yeah.
We've recently become an accredited builder under the CBA program. What does that mean for our clients and for you as a broker?
For me as a broker, it means that the finance of modular is just becoming a breeze. It's never gone through as easy and as simply as it can now with this particular change with CBA. And the fact that you and your company are now on board as part of the preferred partners with CBA is an absolute game changer. And the reason why is it's the buyer confidence, because there's a bit of a process to become on that panel with CBA. You don't just stumble into it. I know you've got to give across a bunch of documents. They verify, they look at all the work you've done historically. So you should be super proud to even be on that panel itself. And then the fact now that clients can essentially do a modular home with a very small contribution. Historically, it had to be about 50% cash they would be putting into these deals, where now it's significantly less. It's the same as a normal home loan or a normal building and construction product. So for us, it's a breeze. It's made the process super simple. It also means that the bank now understands more around this. Because they've got a specialized policy, they now train their staff. So when you're having those conversations with the bank tellers and lenders, they're starting to get a better idea as to how the product works, because it's more well-known now for sure.
We've found huge positive from it as well. And just the very fact that one of the big four banks are happy to back it, it gives a lot of buyer confidence as well. And it's been a tremendously good thing for our industry. You mentioned earlier about some common misconceptions around modular financing. Talk to us more about that. What are they? What's the reality?
Yeah, so in terms of the misconceptions, it's the fact that, a lot of brokers and banks will tell you that it just can't be done. That's the simplest one, right? It's been out there for quite some time that it either can't be done, it can't be funded. You need to have all the money to fund it yourself. That's probably one of the biggest ones out there, is that you need to put in all the capital, so you've got to have 100% of the funds, which just isn't true. Now, if we had have gone back 5 years ago, that was the case. You needed to be able to come up with a lot of capital to be able to do it. So now we're lucky, it's changed. You're on the preferred list with CBA, which makes a big game changer as well. It's now really no different to just doing an ordinary build, which is fantastic.
Yeah, that's good. So does that mean that modular home finance products from the CBA
Mm-hmm.
are the same price as traditional home finance?
Yeah, essentially. Yep. It's the same price. There's no, they're not increasing the rates on you. They're not making it any more expensive. You get access to the same products, the same solutions, the same outcome. It's just a different build style, essentially. And if anything, it's sometimes, in my opinion, it's actually the better build style, because instead of having these whole costs of building a house, which can go 8 to 9 months, you're often cutting that down to half the time, or sometimes even less.
Yeah, no, it's a huge benefit. And I'm sure it's a lot of the times one of those calculations that, typically the end user, the consumer, doesn't think of the holding cost.
Oh, yeah.
Often we sort of focus on the interest rate and what the monthly repayment is going to be, but that holding cost component, do you do much work in that space with your clients to expose that?
I have to, yeah, because I've seen it bring too many people unstuck, where they're partially through a build, they've got no rent coming in, they haven't moved into it, they're probably renting somewhere else at the same time. So it's bleeding their cash flow. And that's something that I think a lot of people don't realize, and it doesn't get pointed out enough. So whenever you're doing a construction, as the build goes, you'll still need to be able to cover some portion of those repayments. Now, that needs to come from ideally your savings, or you have to have sufficient enough earnings to be able to bridge that gap. And for a lot of people, they've done well, because we all know coming up with a deposit, saving money in today's economy is particularly hard. So just to get that initial funds to be able to do it is fantastic. But then, having that reserve cash to cover those repayments is something that a lot of people just don't think about. So the fact with Modular that you can build faster than ever, that means the holding costs are much lower, the interest being charged is a lot less, and you're into that property faster, so you can move a bit quicker as well.
Yeah, that's awesome. So the value of modular homes, how do banks look at valuing those? Yeah, and what do clients need to be aware of, and what do we need to be aware of as a builder?
Yeah, so essentially with the value of the modular homes, I haven't particularly seen a big difference compared to a traditional home. What you need to be mindful of is the bank's going to value it as what we call an as-if completed valuation. So that means that they'll figure out however much the modular is going to be. So let's say it's $200,000 and a block of land's $300,000. They'll just look at the as-if completed. So ideally at the end, it will be worth $500,000 for round figures. So that's what we need to be looking for. One thing, though, that you do need to be mindful of with the valuations is the banks really like to just cover what's in the contract. They don't want to do out of scope items. So if you're going to go and install a significant solar system that's outside of the contract, or you want something like a pool or something that's not built into that, that's something you need to cover yourself and be retaining enough funds to bridge that gap.
Sure. Yeah, that makes sense. So one other item I want to unpack with you today is we speak a lot with our clients around the pre-approval process.
Mm-hmm.
I think I'll just start by asking you, how important is it? When should clients get it? And how long does it last?
Yeah, really good question. So with the pre-approval, my tip for anyone is just don't even look at buying anything or doing anything until you've got a pre-approval, right? Because at the end of the day, you need that pre-approval to confirm what your borrowing capacity is, so that you at least know what you can start looking at. There's no point having a conversation so early on in the process if you don't know what available funds are going to be there when it comes to actually borrowing the money from the lender. So that's fundamental. That's the first step in the process, is to figure out how much can we borrow. And then from there, you can then design a build to accommodate the budget that you're working with. So that's going to be a key player in it. In terms of getting the pre-approval, it's a relatively fast process. For us to get the documents, review it, send it off to a lender, you've got a pre-approval within a week in most cases. So that means that you can now actively pursue an option that's actually going to suit your needs and requirements. And that pre-approval will often last up to 3 months, so 90 days. And then we can often get it extended for another 90 days as well. Give a couple of extra pay slips, prove you've still got a job. We can just ask for another 90 days on top of it. So you've got 6 months that this is now valid for, which gives you time to kind of figure out the designs and layouts and everything else to go with it, all those intricacies.
Yeah. And if your circumstances haven't really changed over that 6-month period, like sometimes to get through development, documentation, council, DA, so on and so forth in one of these projects, it can take a long period of time. Like you're talking 6 months plus.
Yep.
if my circumstances haven't changed much, I shouldn't really be too worried if my pre-approval has expired, should I?
No, not particularly. So if your circumstances haven't changed, your income's the same, your expenses are the same, the interest rates are still the same, then really it's not going to have a huge impact. If the interest rates were to go up a little bit, sometimes that can change the figures slightly. But that's the key thing is when you're doing your pre-approval, you're often trying to leave a bit of a buffer in there as well. You don't want to always push it up to the absolute maximum a bank says they're going to lend you. So having that little bit of a buffer, but we can always get it reviewed as well. So it's not the be all or end all. We can always still get it reviewed. But what we would often say to a client is if the pre-approval expires, we've got you pre-approved once, it's pretty right to say we'll get you pre-approved twice as long as nothing changes.
Yeah. So like if my job changed or I lost my job or something in the process, obviously that'd be a red flag. But if everything else is a status quo,
Exactly. Should be sweet. Yep.
no, it's good to know. Now, I just want to unpack one last point on pre-approval. I'm labouring this point on purpose because we have had some challenges in the past with our clients getting some different advice from financial institutions. So our process is as such that our clients will come to us, we'll unpack a project with them, we'll do a project discovery, run through a proposal presentation with that client. And then the first step for them is to commit to what we call a pre-contract. So they're paying us a varied amount, could be $15,000, it could be 30, depending on external consultant reports they need, so on and so forth, how complicated planning may be. But they're paying us that fee up front to get the development documentation finalized before we can actually lock in a contract price. We're often advising our clients that it's before they make that commitment, they should be getting a pre-approval just to make sure they can actually get the funds.
Mm-hmm.
We've kind of stuck in the past where our clients have gone to a bank or to a broker to go through that process, and the broker comes back to us and says, "Oh, we need a contract." What's going wrong there?
Yeah. So in terms of what the brokers will be doing there is they're wanting a contract to sale and they're trying to skip the process of the pre-approval and go straight to what we call a formal approval. So what you would need to do is you get pre-approved for the loan on the basis of a few conditions. Now, those conditions in the lender's assessment are going to be very basic. One's going to be come back with a contract to sale, and the other one's going to be subject to evaluation of that particular as if completed property. So that's where we're finding a lot of brokers and banks are just trying to bypass that step because they're trying to get the deal done today when really it needs to be done in 3, 6, 9 months time once everything's prepared and ready.
Yeah.
So if you're getting that pushback from your bank or your broker, that's where you need to say, hey, I'm here to get pre-approved to find out how much I can build for. We're not at the stage of getting a build contract, so we're kind of jumping the gun a little bit. And it's no different to doing a traditional build, right? So if you were to do a normal build versus a modular, it's the same pre-approval for the same construction. It's not anything different that we're applying for. We do want to tell the bank that it's going to be a modular in the future, just so they're aware of it. But it's the same pre-approval, nothing changes, the same rates, the same product, the same solution.
No, that's very good. I think that's very, very clear. And I think our listeners will get a lot of value out of that explanation. So thank you for that. Moving on to deposits. What deposit do I need to start building a modular home?
Yep, it's no different to a traditional style of home. So ideally what we would want is a 20% deposit's always nice. There is some solutions out there where we can do it with a slightly less deposit as well. So that's where it's really key just to chat to the broker to figure out what options are available at any given time. And those options change and vary lender to lender. So that's the key fundamental piece of having a broker that's good and knowledgeable in the space because we know what's going to work with your budget, what funds you've got available, and maybe some other ways that we can use what type of assets you currently have to bundle that in to maybe minimize the deposit required. In some instances, we will often do this without even needing any deposit if you already have an existing property. So it's no different really to any other type of property purchase.
Yeah, no, very good. So we've talked about pre-approval. You just quickly touched on deposits.
Yeah.
At a very high level, just run me through the process of financing a modular home from start to finish.
Yep. Awesome. So the process would be if you were to work with us, very simple. So we have an initial conversation, get a bit of an understanding about what you're looking to do. From there, we gather some basic documents, we prepare an application, and then we submit that off to the bank. And we do the pre-approval process that we touched on before. So that's the key part. We want to figure out, first of all, how much will the bank give us for that construction? And then from there, we would refer the client back to yourselves so that they could continue on figuring out and designing their build, what's going to suit within their needs, their requirements. And then once the build's finalized, we've got the contract and we're ready to go in the future, we would then return to the bank as per the conditions on that pre-approval, which said we needed a contract and we need to get a valuation. So once we're finally at that stage, we get the finalized contract, we send it off to the bank, They send a valuer out to the site who assesses it. It'll come in ideally as if completed valuation. And then from there, we then go back to the bank, we get the formal approval, and we proceed to settling it. And then we just wait for the bill to be completed. So it's not a complicated process. It's very simple. It probably seems more daunting than it is. I think having someone in your space and sitting beside you that knows what they're doing to kind of push it along and kind of answer those questions as you might stumble across them, that's the key thing. So that's where having a broker that you can call and say, hey, what do I do? I'm getting asked about this. We can help you solve it. And 95% of the time, we're solving things that you don't even know about, right? Where if you go direct to a bank, they're going to just keep sending you more and more information requests, confusing the situation. Where having a broker that knows what they're doing in this space is going to be fundamental to getting it moving quickly.
Yeah, 100%. I couldn't agree more. So let's assume we've gone through that process. We've had our pre-approval. We've now got our loan approval ready. How do progress payments usually work for modular home?
Yep. So progress payments for modular homes will usually work in 3 stages. That's the simplest way the lender will view it. So they'll usually do a deposit stage where they'll do a 5% deposit and fund that. And then from there, they'll do a 45% payment where they'll then bridge up to 45% of it, sometimes even up to 80% depending on the lender and the policy. If it's CBA, they'll then bridge significantly more up to 80%. And then the final amount is due once the property has been fixed to the site. So that's the key word that these lenders are looking for in the modular space is fixed to the site. They want to make sure that it cannot be driven away with, that it's actually fixed and cannot be moved, and the utility services are connected. Now, those utility services can all be off-grid if you particularly like. So that can be your solar, your septic, and then your water. As long as it's got those services connected and it's fixed to the site, that's when typically the final payment can be released.
No, very good. That's very, very clear. So when I'm going through this process with you, applying for a loan, are there any red flags that the lenders don't like that I should potentially clean up before I start this process?
Yeah, in terms of what the lenders don't like, I think one of the things we're finding is just bringing a lot of people unstuck now is these buy now, pay later facilities, right? It's a bit of a sign that if you've got a lot of buy now, pay later, and we're talking about things like Zip Pay, Afterpay, Buy Now, Klarna, there's a whole bunch of them. I can't even remember all the names because there's about 50 of the things at the moment. And the reason we're seeing them more is because they're starting to show up on the credit report. Where historically in the past, we never saw them on the credit report. We might see them in the bank statement. So the bank is becoming more aware of them. And it's a sign that you probably, not that you can't manage your money correctly, it's just a sign that maybe it doesn't look so favorable. The banks would prefer you save money and you just buy things instead of taking out these kind of delayed payment facilities. So that's one thing. Cleaning up those, closing down those facilities, making sure they're all gone, tidied up. Well, ideally, we don't want to see them. In terms of the bank statements, the key things are always the gambling. We don't want to see the sports bet transaction every second day for $50 a pop, or the big cash withdrawals of $350 out of an ATM every week consistently, and transferring money to your friends with all funny names because I've seen them all. Yes, there's nothing surprising me anymore. So just try to really clean up the bank statements. Just be mindful you're going for an application. The broker or the bank's going to at least see some portion of those transactions. So just apply a bit of common sense there. The other thing is just checking your credit score. That's a really common one to kind of slips past people. There's a lot of free credit checking facilities out there now where you can go and check your credit score, see what it's sitting at, and it will help you identify if there's anything that's going to be popping up in the future. So unfortunately, we live in a world of a lot of identity fraud and all these cases that we're hearing about. So there is times where people have got facilities they're not even aware of that can impact their credit. So get onto it early, start reviewing your credit score, keep an eye on it. But other than that, it's pretty straightforward. We're just looking for consistency of income. Things just generally need to make sense. And if they don't, that's why we're going to ask a lot of questions about it. So that's what you'll find. Sometimes the bank's going to ask a bunch of questions. It's just because they're trying to make sense of the situation. So just those key things, right?
That's good. That's good advice. And just on the credit score, how do I check my credit score?
Yeah, so there's a platform online called ClearScore that you could use. There's Equifax that we use. You have to pay for a report through Equifax. As a broker on every one of our clients, we will run a credit check on them. Yeah. The benefit of us running a credit check is that it doesn't actually impact their credit score. So if you go to a bank, because they're a lending institution, they run a credit check on you, that will show up on your credit report. As a broker, we don't show up on there. So the reason we do that is we want to make sure whenever we submit a loan to a bank, we're putting our best foot forward. We're trying to cover off on all those things where I said we just want it to make sense. So we're writing a bunch of notes, a story about why the bank should give you money because we're basically representing you to that lender. So we'll do that credit check for you. We're going to make sure everything looks really nice and packaged up. And if it doesn't look as nice as it should be, we'll always tell you exactly what you need to go and do to get it bank ready, we call it. So finance ready, bank ready. And then from there, you can make those right steps. But yeah, Equifax is the best one online.
Yeah, not perfect. That's good. Change things up a little bit now. So let's talk a little bit more general about the economy.
Yeah.
We often have our clients talking to us around a little bit of uncertainty in the economy at the moment. When's the right time to build? There's a bit of uncertainty around interest rates. We had an interest rate increase last week. Um, what's the right advice? And I know that you don't have a crystal ball to look into, but do you wait? Do you just go? When's the right time to build?
Yeah. I mean, historically, if we look back and look at the property in the market and the whole economy, I mean, the best time to do something was always yesterday. So I think if you're in a financial position where you can do it, you can secure a house and you can get your foot into the market, in my opinion, that would be key, because moving a little bit quicker is going to set you up long term. So the sooner you can do that, the sooner you can meet the bank policies. And as you said, we don't have a crystal ball, so we don't know what the banks will say in 2 years' time from now around their lending restrictions and criteria. So if you're in a position to do it, often starting sooner rather than later is where you're going to get the best performance out of the property. And for most people buying a home, it's a long-term investment. They're going to hold it for the rest of their lives, or at least a large portion of their life. So getting in sooner rather than later, in my opinion, is where we've seen our clients make the most and get the biggest amount of benefits specifically from property. So I reckon there's never a bad time to start. Probably the biggest thing that you can do is just holding off, because that's where we see people come unstuck, as the serial savers, I call them. The ones that just love to save money, but then they're constantly chasing the market and then they're just never able to enter. And every year they come back saying, geez, I wish I had brought last year. Geez, I wish I had brought last year. Time and time again, we hear it. It's a really unfortunate thing, where at the time they were actually ready to go. They had the funds. It was just about that mindset of being able to commit to it and getting it done.
Yeah, own the space that all of us want to be able to jump into the real estate market and just ride a peak.
Yeah.
But because we hold this asset, if you like, for so long, we're always going to ride peaks and troughs, aren't we?
Yep, exactly.
I think it's good advice that you've given us. There's nothing quite like yesterday.
Yeah, exactly. Yeah, there's always going to be peaks and troughs in the property market. But at the end of the day, you've got to think about what it is you're trying to achieve, right? You're trying to get a roof over your head. So you're either going to pay your own mortgage, you're going to pay someone else's rent. That's the key thing. So which one do you prefer to do?
Yeah, that's good. So from your perspective, I know we just said we don't have a crystal ball, but you must have a gut feel. Interest rates, where are they headed?
I would hope that they would just stay where they are. Or start going down. That would be the preference. In terms of where they're headed, though, look, I think there may be another interest rate rise moving forward, probably potentially even a few months away. So we'll have to wait and keep an eye out for that. But at this stage, I think it'll start to slow down again. I also think we kind of needed an interest rate rise to try and cool the market. I don't know if you see the market right now. It is really hot and it's moving really rapidly, particularly for first home buyers. So I think that cooling it down a little bit, kind of making it a bit more accessible again for everyone while everyone adjusts and makes some shifts, probably wasn't the worst thing. Yes, it hurts the household budget. That's never fun, but it is probably something the economy needed, the property market actually needed. So I think crystal ball, maybe another interest rate rise. Hopefully that slows down from there and that's it for the rest of the year. And moving forward, and ideally start to trend back down at some stage. But from what we're seeing with the banks, a lot of the fixed rates are going up, which is a bit of an indicator that the rates are intended to maybe increase slightly in the future as well.
Yeah. But do you think that, like the uncertainty, so what we saw a few years ago of them, going up, it felt like every time the Reserve Bank met, it was up again. Do you think that instability period, we're beyond that now? So we might see some slight increases and decreases, but we're not going to see anything too dramatic, do you think?
Yeah, I think that's the case. Yeah, I think the property market's moving so strongly now and the demand is still so high, where last time we just came out of COVID, there was already a lot of uncertainty around the economy and what was going to happen in general. So every time there was a rate rise, that really kind of threw everyone off and put them into that scarcity mindset where everyone kind of went, oh, I might not list my home. There was a lot less supply hitting the market as well. So I think this time, because the market's so hot and things are moving so quickly, even with the interest rate rises, it will slow it. I don't think we're going to see, in my opinion, maybe it go backwards. I think it will just continue to go up still.
No, it's good. No, there's been some very valuable insights. Daniel, really appreciate you coming along today.
My pleasure.
Last question.
Yeah.
How do our clients contact you?
Yeah, so in terms of getting in touch with us, you can find us on our Level Up Loans website, be the best way to get through to us, or you can email us at loans@leveluploans.com.au. But probably the best way is to actually reach out through Anchor Homes, have a conversation, and then they'll put you in touch with us. And specifically, myself, I'll touch base with you, reach out and see what we can do from a finance perspective, get you finance ready, as we discussed earlier, making sure you're set up, ready to go. And then from there, we can get it all underway.
Awesome. No, appreciate it. And I can validate what you said. You've been a great partner for us and we'd love to refer clients through to you because you're quick, you're fast. You give us advice that our clients need.
Yeah,
to be able to get to that finish line sooner. So thanks very much.
my pleasure.
So hopefully this podcast has helped debunk some of the myths around financing a modular home. Thanks for joining us in an inaugural podcast, Anchor Talks Ask the Expert series. Look forward to seeing you next time. Cheers.